On January 20th, the credit cards in your wallet become toxic assets. On January 20th, the credit cards in your wallet become toxic assets. Most people heard the news and cheered. A 10% cap on interest. Finally, relief from the banks, but the banks aren't smiling because you cannot run a subprime lending business on 10%. It is math, hard, cold, and unforgiving. When the risk exceeds the reward, the machine stops. We aren't looking at a cheaper era of borrowing. We are looking at the end of borrowing as you know it. A leak came out of a major lender's office recently. A quiet admission to a few at CNBC. The message was simple: they cannot survive this. If you can't charge for the risk of a person defaulting, you don't lend to that person at all. This isn't a policy. It's a purge. Think about the millions of people living on the edge. The ones the big banks call subprime. On January 21st, they will find their credit lines slashed to zero, not by choice, but by necessity. Look at the charts for Synchrony or Capital One. The names that live in the high-interest space, they are bleeding. Their risk pricing models are built on the reality of the last 30 years, and that reality is being deleted. This isn't a market adjustment. It's a ghost bank scenario. The buildings will still be there. The logos will be on the street, but the money will be locked in a vault, reserved only for the elite few who don't actually need it. There is a shadow trend here that no one is talking about, while the big banks freeze. The fintechs are waiting. CEOs in the BNPL space are nodding, because they don't need 20% interest to make a profit. They operate on a different rhythm. This is a forced migration. The government is effectively evicting the traditional banks from the credit market and handing the keys to a new breed of digital lenders. It is a controlled demolition of the old guard. You have to ask yourself, why now? Why Jan 20th? It coincides with a massive shift in trade policy. Tariffs that will squeeze the consumer's wallet from the other side. You are being caught in a pincer movement. Your costs are going up, and your access to credit is going down. This is the moment where liquidity becomes the only thing that matters. If your wealth is tied up in the old system, you are a ghost in the making. Mainstream media will tell you this is a populist win. They will focus on the few bucks you save on your balance this month. They won't tell you about the millions who will lose their ability to buy a car or fix a roof, because their FICO score isn't gold-plated. We are entering an era of tiered citizenship, based purely on your proximity to hard cash. The invisible bull is running, but it's trampling the middle class on its way to the top. So, what do? You stop playing their game. You look for where the liquidity is flowing, not where it's being cut off. You watch the names that aren't tied to consumer debt. You watch the hard assets. Gold isn't just a metal anymore, it's a lifeboat. When the banks become ghosts, the things you can touch become the only truth left. You have to be your own central bank now, because the one you've been using is about to shut its doors. The banks are waiting for January 20th to see who blinks first. I've lived through enough cycles to know that if you aren't at the table, you're on the menu. If you can see the writing on the wall, drop a ready in the comments so I know who is actually paying attention. Subscribe and hit that bell, because when the credit stops flowing, information will be the only currency that buys you time. Don't be a ghost.